yet another example of what that means practically and some of the unintended consequences for projects that had part of their treasury there parked for the purpose of market making. Don't get caught with your assets in somebody else's custody, especially if they are an exchange that have fallen off in recent years and just aren't a market leader. There's a reason for that. And you have to rely on advisors, your own instincts, as well as market makers and these types of subject matter experts to guide you through that shifting landscape. Because the leaders of yesterday, if you were gonna, when I first got into crypto, I wouldn't recommend listening on Bittrex anymore. They're kind of closing shop. So, but that would have been, you know, the biggest exchange in the world for all coins when I first got involved. And Binance hadn't even launched yet. There was no Binance at that point. So it's good to just stay on top of these things, and you got to rely on, and that's why it's good to bring in partners that have different areas of expertise.
Yeah, so like practically speaking, how would you approach it if in terms of, you know, because when you're a founder, right, or working in a company and you're getting ready for a token launch, you know, you kind of have this long list of, all right, here's all the exchanges we want to talk to, and start getting your quotes of like what they're asking for listing prices, and you know, you're probably going to get more small, like of the lower tier exchanges and marketplaces that'll seem, you know, more palatable from a price standpoint. Like how do you navigate that?
Yeah, you bring in, you rely on expertise that you have a gap where there's a gap present for yourself. You either have maybe somebody in the team that's running the token strategy that's come from previous token ventures, have gone through the process, the pain of learning who's reliable, who's not reliable, and some of the tricks that these counterparties play, or you have external support, whether it be from a Horizon or whether it be from a market maker that has, with previous clientele or projects or partners, walked through the same process. Um, that's one thing. Another thing is doing your own due diligence about their social profile, the levels of engagement that they're getting, going on similar web, seeing what their web traffic looks like, see where it's coming from. Just these different, just be really curious, you know, let curiosity grab you, try and do some digging and learn. Create accounts on any marketplace or any exchange that that you're considering for listing your own token. It's time to become a user. See what the user experience is like, the user journey is. Create an account. Um, After that, if they demand KYC, if there's somebody on the team who can pass the KYC, create an account. Send test funds. See what the trading experience is. Is it really simple to use? Will there be a lot of friction during the process of acquiring tokens or trading the token on their platform? Try and withdraw. You know, try and create a problem for yourself. Contact their customer service about something. Their whatever it may be, whatever channels they give you. Maybe it's a chat bot, maybe it's email. But you know, work on it. Get to, you know, create a problem for yourself, and see what the results are. So some of it is going to be bring somebody on internally that has that market expertise through experience, relying on external support for that to lend the market expertise. Look at their socials, see how they interact with people, see what sentiment is around them, and create an account and become a customer and create a problem, see how they solve it, or at least help you solve it. Those are the kind of ways that I would approach any of the exchanges that I'd be looking to list my project on, because they're so critical once you do have that listing and they do have assets on their in their custody. It's so important that taking the time, not rushing into it, is worth the hassle. And the last thing is, when you look at these tier one, tier two exchanges, the ones that might quote the highest prices, the ones that might be the most challenging to court and get to catch their attention in a meaningful way. You also should ask yourself, why are some projects able to get this attention and why am I not? And what gaps are there for me that I need to fill in order to be one of those projects where they're chasing you rather than it being the other way around, and work backwards to solve those problems so that the power and leverage dynamics are not so are not so lopsided as well.
No, that's great. I'm also curious if once you've launched a token, if you're a company, right, you deploy your token, it's on a couple exchanges. What do you think, like outside of just specific to their like business and product, but specific to the token, what do you think are like the KPIs that make the most sense for our company to be looking at, right? In
Yeah,
regards to a token specifically.
yeah. So the type of KPIs that I've seen mostly with exchanges that typically get set up as part of the listing agreement um, are a number of users or accounts that get created um, in in response to listing announcements, either through use of referral links or tracking when the listing's announced and publicized. There'll be a link to learn more about the token and then to create an account from there. So they track the user onboarding journey and see if they've come for the token, if they essentially come to create an account to participate. So that's one thing they care about. Um, in a bear market, they're very sensitive to things like daily trading volume, which I really hate to see because it forces projects to potentially make challenging decisions about meeting these KPIs when organic demand isn't there to do all of the heavy lifting needed to meet that daily KPI. The so trading volume would be one. The third thing, so there's user acquisition for the exchange, basically KYC signups and funding new accounts. Daily volumes, these typically exist anywhere from 1 to 3 months post listing. This is like the critical period of time that they track. And the last thing would be amount of liquidity in the order book. If you think back to our original presentation on Monday, and you think about the near spread depth. So when you have the spread, which is the basically the lowest sell order and the highest buy order, 1% up, 1% down from that spread, they look at how much depth is there, how much in terms of USD terms, how many orders are packed into that tight space, and they'll have some KPIs around that. Maybe there'll be 5K, maybe 10K USD worth of orders need to be there at any given time, and they do those periodic checks. That's just a liquidity check for the book, for the order book. So those are the things that you should align with your market maker on, and be aware that you should have knowledge of, so you can look really smart in front of the exchanges and and studied and educated, and also when they ask about, hey, how are you going to get those users over to us? Maybe you can already strategize on how to answer that.
Interesting. Like there's so much like that goes into this. And it's really like a huge time suck too for like teams and like founders especially.
Mhm.
Um, you brought up like, yeah, you could work with like an advisor like us or yourself, um, or hire somebody on your team that has, find somebody who's either done this before and has the expertise, or kind of give like a project manager that role. Like it's really like the token, and the token launch especially is really like its own carved out like role, and then managing and building on top of the ecosystem after that is,
Yeah.
a role in itself too. And the best experiences I think that we've seen with clients are those that have like a dedicated person to this, um, rather than having, founders or, core management like running this. So, but again, it's very hard to find like people who have that expertise and the experience to go through token launches and to know how to navigate things like what you just previously mentioned, Matt.
I agree. I mean, there's a lot of people that say they have the experience, but there's really a small amount of, I'd say, capable operators that are trustworthy and work at a high level, a level in terms of quality that you would demand of yourself on the product side, of a business operations side. Um, so, there is some of that um, that gap in the demand for that sort of talent and the available um, talent to fulfill those needs. A lot of the people who have done really successful token launches and have been part of that core process, they're technically retired, at different stages. So a new cycle, a new crop needs to come up and be really activated and go through the pain. And then some of them do really well and decide, well, that I don't want to do that again. So yeah, I think the most realistic thing is if you win the lottery and you get you're in one of those rare cases that one of the founders is really educated. It's not their first venture with a native token. Then you kind of get that built into the C-level. That's fantastic. If not, having a mix of working with a couple different third-party advisors and or counterparties to get like a bit of a council together. So you have a few different point of views that you could leverage to make the best decisions. Like for instance, if it would be Kairon and HLV at the same time, getting two different dynamics, two different understandings. That would be the best way to do it to fill that need without having to find that needle in a haystack to hire internally.
I'm chatting with two platforms that are launching tokens at the end of this month. They've given me a lot of insights. They've connected me with the listing manager from OKX, Binance.
Which one?
So that was
Daniel, Flavia, Chris. Who are you
the
talking
name
to?
I got was so for Binance was Anthony Sang, and then Chris Yao was the OKX
Chris.
person.
Chris,
You're
yeah, he's a
working
great
with
guy.
them. It's NFT Inspect, so I know that team pretty well. To work
Cool.
with them, so I think that's one of the things that I'm doing is just leveraging those relationships with teams that I know
Yeah.
have been building and are now going through this stuff because
Yep.
they'll have conversations with you and like that you just it's a very high level conversation that most people are not going through, and you're stuck trying to figure out like who are all of these people, who are the gatekeepers to these exchanges, how do you get in front of them, like how do you even talk to them, right? It's almost like a sales process in itself to even potentially get into them, and so trying to have as potentially as warm referrals, right? Where you
That makes
can,
sense.
is just something we're trying to do.
Yeah, and the Inspect team is great. I love them. Been working with them for a while now, and they're gearing up for their launch this quarter. They kind of have that benefit of having like crypto savvy founders. At the same time, leveraging us and other external, so they're adding layers of redundancy to make sure they cast the widest net. So tapping to those types of teams and creating partnerships around that, even on product, as well as just sharing strategic knowledge, so important. That's why it's so important to create a great reputation for yourself with other builders in the space, because they'll be more willing to kind of like dedicate some time to assist you because they want to see you succeed. And it's a small industry, right? So word gets around when you use and abuse people. So it's great that they're willing to share that knowledge, and I'm happy to hear it. I'm not surprised. Chris is great, by the way. Chris is my favorite. We spent a lot of time in Singapore together, face to face. So you could tell him that I gave a thumbs up to him.
Awesome. I'll
good
put
guy.
a note next to it.
Yeah.
Can name
definitely.
drop Matt.
Can name drop Matt, and Matt says Chris is good. There you go.
Just a general question that I have, like, is I guess it kind of matters, like the exchanges that you go with initially, I guess, right? And I guess that also cascades to, other people because I assume that this is like you have to build these individual relationships with, places that you want to list. It's not like suddenly you listen to Binance, and then Kraken comes along and be like, hey, we'll work with you, or I don't know, how does it work?
So Binance might be the only case where once that listing happens, they will. But outside of a Binance listing, you're right. These are everybody, you have to give face to everybody, and time to build that relationship, especially if you want to be treated more as just another project on their very long list to go through. So at the end of the day, we're human beings. We need to build relationships with each other. We need to see each other. We need to talk about other things that exist in this world outside of just list my token or will you list my token. So creating like relationships is an authentic and a rewarding thing to do, and that extends beyond just like us in this room. That also is the same thing with these listing managers. They want to make friends too. This is their chosen career. This is they eat, breathe, sleep crypto. So there's a lot of things to chat about, and yeah, I'd say you have to give dedicated time, resource to creating relationships with key members of each exchange that you are essentially going to be courting at one time for your listing. And then if you have a successful exit or you issue a second token in the future, you're going to utilize those same relationships in many cases to make your next venture smoother, and you can leverage those relationships to help partners that you have that are listing and creating tokens to pay it forward. So it's just a good exercise.
Cool. So I guess it's kind of like what Vincent was saying earlier, kind of have to be dedicated in this role, right, to be successful.
Unfortunately, so
yeah.
Yes, it's going to be your biggest time suck outside your fundraise.
I mean, it essentially is another fundraise, right? Like it should be
a liquidity event.
Yeah,
it is. It's just in the secondary market.
Just curious, like on the whole Polynex thing, I think they're going to recover it in doing it, but is there any, this is probably a dumb thing, right? There's no insurance policies on those things, right? So if it just gets exploited and your tokens get taken, there's no overarching thing within it, right? There's no even third party, anything you can do. I see Matt smile. I know it's probably a really stupid question, but
I see a lot of claims about proof of reserves, but that's number one. I don't think that includes proof of liabilities. I never see that, by the way.
fair.
So it's somewhat meaningless.
Yeah, it was that was a big topic like during Celsius, FTX. Yeah, like
even Tether.
Yeah.
Voyager.
Right.
Yeah. Proof of liabilities is really what you want to say.
Right.
But on top of that, proof of reserves is all about being able to back, is basically showing that you don't have a fractional reserve, right? If there's theft and a massive hack and you lose, if you lose assets, then you don't have, you just have a shortfall. So you're saying, what are the stopgaps there at that point? Well, your best effort is asset recovery. Getting those funds frozen if they're USDT and reissued, making a deal with the hacker involving law enforcement to confiscate those funds eventually, to return them. It could be a multi-year sort of arduous task. If somebody was successfully able to get, Tornado Cash was like the best place to obfuscate funds, to wash funds off chain or on chain rather. So there's these toolings for these malicious actors or actors who want privacy for one way or another of where their funds go, that make it really hard to recover assets. So in terms of insurance, I think Binance has a self-fund insurance pool. KuCoin similarly announced these things that exist outside of their reserves. Like this is like in case of a hack or loss to make users whole. So make sure, don't feel comfortable to search for these things. Ask exchanges. Number one, do you have something like this? Like Binance has? If so, how much, what's the size of the fund? Can I see it on chain anywhere? And then also look back and see what their of reported hacks, see what the history is. OKX has been one of those exchanges who's just been super tight with security, high reliability. There have been other exchanges that have been hacked before, Binance and KuCoin to name. So I think some of the times they've created, as a response to combat any FUD, they've created these recovery pools to win back the faith of the users when they lost the users' faith because they didn't have proper key management, or they had insider abuse or admin abuse. So there is no insured global exchange right now that you'll be listing on. But there are some that have self-funded contingency pools to recover from hacks like this. Poloniex has been on a decline for a long time. It is far from the days of when it was run and owned by Circle. So now it's kind of really much it's under the Tron ecosystem, more or less, in terms of ownership at the end of the line. Same thing with Yobi, HCX.
Yep.
So what I would do is you look at Poloniex, you see how they recover from this, and then consider that HTX is owned and run by the sort of the same entities at the end of the day. So if they do a good job, then maybe HTX or Huobi becomes an exchange that you're still willing to look at. But if Poloniex doesn't do a good job here, and it's uncovered that there was some negligence that led to this hack, you kind of have to also ask yourself at the same time, is Huobi, or formerly Huobi, HTX now, are they reliable? Because the same ownership at the end of the day led to the mismanagement of client funds on Poloniex.
KuCoin had a lot of FUD around that stuff, as far as like, did they actually like have the liquidity for doing it? And for like the last year, people were saying, oh, they were insolvent, but I have other people that swear by KuCoin, and believe it's wrong. In your opinion, they're not a Poloniex, but they're definitely that mid-tier, more on the bottom end. Which
they're on a global exchange perspective, we kind of look at them as tier 1.5 actually. So you have global, these are non-US, by the way. I'm talking about non-US. Binance, OKX are tier 1, and then 1.5 would be like a KuCoin, Bybit. And then below
MEXC.
that would be MEXC. Tier 2 would be MEXC, Gate, and then slightly below that, I even would say like BitGet, HTX. That's kind of like where I'd stop.
Got it.
And even that, like HTX, like BitGet, like, I don't know. We'd have to see what value that they could bring in uniquely for a client's liquidity event, listing event, to see if it's worthwhile taking on a third party risk.
One more question. Is there a short cheat sheet or something, or maybe a quick note I can take of which of these exchanges represent which demographics? Because I know you were saying that certain of these exchanges cater towards certain country demographics, and obviously on a larger it. So I just like, so you could potentially partner with specific ones that were country based. Is there like a reference sheet for that, or like off the top of your head, it's like these guys are mostly Koreans, right? Or like these are mostly, Chinese that use this stuff, right? So if like obviously if you use Huobi, you're probably getting, you're touching Tron ecosystem, you're touching, it's not American citizens you're touching as part of it there.
Nah, they're KYC prohibited and geo-gated. I think most of these global exchanges that I listed, maybe outside of like BitGet or MEXC, or I don't even know if MEXC would allow that now, but if you're not using a VPN at least, but BitGet I think will allow you. Most of them are KYC, either KYC mandatory, like OKX, Binance, OKX. KuCoin is now KYC mandatory as of 3.5, 4 months ago. Bybit's been for a while. Gate is. MEXC might not be, but they have like, you have like a very low level account in terms of clearing funds. And then BitGet, I don't believe is, but all of them, you need a VPN if you're in the US to actually to not have your IP address blocked and excluded. So what I would say is there's not a cheat sheet, and a lot of these exchanges don't want to tell you where they're strong in because they don't want competitors to get their hands on it. So when in terms of the global exchanges, I'll tell you what I can tell you is where they can't really access the markets in, and then maybe and then you can kind of
Work backwards.
So so the US and Canada is pretty much out at this stage for all these global exchanges. And South Korea is supposed to be out. However, a couple of them still find a way to get access to that liquidity through regional exchanges arms that they own. Japan is a no-go. Their SEC there is so stringent, is so adamant that only local exchanges really get that liquidity in the Japanese market. China is basically the world of VPNs, so it's pretty much available to trade one way or another on most of those exchanges that I listed. Predominance of Chinese users do use OKX, Gate, MEXC, less so Bybit, and less so KuCoin. And India has been an interesting market to crack for exchanges. They just have really challenging tax law and on-ramp, fiat on-ramp laws and off-ramp. So they've taken some of the incentives away from people to get into crypto through centralized exchanges through really predatory tax law. But that's one that they're still actively planting seeds in because of the size of the GDP. Southeast Asia as a whole is being targeted and pretty well saturated by all the major exchanges in terms of the international exchanges that we listed. South America is a bit of an uncharted territory, still like a frontier that needs to be captured. So I'd say
So
Africa
China was
is
OKX, Gate, Mexi. US was Gemini, Coinbase. India is basically a mix of.
Kraken.
Oh, USA is Kraken. Yeah. I forgot
Yeah.
about Kraken. They're such a sleeper. Like I used them like once. They're not as loud anymore. But their CEO is legitimate. Like he's like a
I don't know, he's
stud.
an OG of an OG.
Yeah. He did something the past year that was brought him like to attention. And then India, who was the main, or that's just rolling up to like Gate, KuCoin.
They all are courting that market. It's just that it's hard for them to trade in and out of fiat because of the cost of doing so. Recently have been told that Paribu is like basically the local Binance in Turkey, which is an extremely early crypto adoptive market due to the fact that their local fiat currency has entered hyperinflation or nearly hyperinflation. It's probably more volatile than most of the altcoins that I have in my MetaMask at this point. So they've learned to adopt crypto as a safe haven that's accessible to them, and so they're ahead of the curve in utilizing crypto to hold assets. So Paribu is definitely important in the Turkish market, and all these crypto exchanges I mentioned, the international ones, they are focused in the crypto market in Turkey. They're all very interested in the CIS region outside of Binance. Binance is more or less giving up Russia altogether in that area of influence. But OKX is focused on and winning some market share there. And Bybit and some other of the exchanges are focused on growing there. To the fact that having specific calls in your in your coal campaign on your list of coals is actually seen as like a favorable thing. And so some of the courting exchange strategy is knowing who they want to talk to, and who they want, what user profiles or demographics they want to win. Don't be afraid to ask them, by the way. You're just going to be
Yeah.
making their job easier, right? Because ultimately they need to build a case of, hey, my higher up gave me XYZ KPIs or ticks that I need to check off before I feel comfortable like bringing this project to the team for listing. Ask them, hey, what user metrics do you care about in terms of how many users should I show? How many signups should I have? Where do you want the calls to target? What regions are most important to you? These things will shift over time. So you should get an updated perspective from them. And that can kind of inform your marketing spend when it comes to that ramp up campaign to get that critical mass leading to TGE, which is roughly a 30-day ramp up.
And Matt, I'm curious, when you think about making markets on different tokens, how do you think through the various like stinks of the token and like getting to a listing, and let's say you have a successful launch, but I mean, what happens the week after the launch hype dies and there's no like token activations or syncs for that token, even on day one, right? Like how do you think through that framework for your clients? Like, and I know that, you know, it takes time for an ecosystem to build, but do you guys look for like token activations on or near day one as like a criteria to think through working with different clients?
It's become more and more important to us as the market has matured and got smarter.
Yeah.
It's longer gone the ICO days of 2017, 18 that you can build nothing for 4 years but have a token in the market. Like that's not the expectation anymore, or the standard. So so what really needs to happen is there needs to be some token utility that's built into the protocol. That's I think announced and released within the first 30 days post listing, if not the first week.
Okay.
You have to give people something to do with their tokens other than sell. And it's in your best interest to do that. Maybe that's stake tokens for a mystery box of NFTs or perks, or just give them something to do, so that you can attract some of that inflation, some of that float, that uncontrolled float in the market. Keep them from just offloading on exchanges and getting shiny object syndrome elsewhere. So that would be one thing. It's either incentives for not selling and doing something else, loyalty incentives, essentially what they are. Or
that's just buying you time though, right? Like that's
buying you time to launch the utility.
Sure.
Right. So if you can't practically do like launch the utility, or at least enough of the utility around the token within the first 30 days, then you better have some other buy your time schemes, or you're going to see more issues with token holder retention in terms of your first time purchasers.
Great. Yeah, I mean, yeah, great.
The
You also need, just really quickly, you also need a critical mass of people who are going to use the token. So you can have token sinks, but if you have a very, very small community, or if you're not well known, it's not going to go anywhere because, you know, there's not a lot of people activating with the token. So it's really tough, right? It's a very tough like set of forces to have to balance. But sorry, Eric, go for it.
No, I was saying it, and then there becomes this point of no return that you will reach at like day 45, 60, where you won't be able to pay a KOL to call your thing. You won't get anyone to even touch it because they won't like the chart, right? And so like that's a very real thing where people think they have more time, and the space is so impatient. And if there's not a reason to hold, and if you're core holders do, and then a whale or two dumps. You know, a lot of coins get in these positions that like they won't be able to restore market trust to recreate a leg up that will restart the narrative that's necessary to create volume, right? And and you'll go to your
Sure.
market makers and they'll want obscene amounts of money to try and get you to the next leg to reinforce that narrative, but then it'll
Bad,
just
bad
get dumped
idea.
on. Yeah, it'll just
Yeah.
get dumped on. And that I've seen that even I saw a team blow 150,000 and that and it just all got yeeted into and it still went to zero with it. So
Of course.
um
It's artificial. It's not sustainable. Well, and then the end of the day, you still have that issue of lack of organic interest, and unless you're creating, I mean, unless you hit lightning in a bottle and hit an amazing narrative and have the right call at the right time alongside with that push, every time I've seen it done, 99.9% of the time it fails. So I don't like those odds. I would never recommend it. And also, I think kind of knowing what you know and knowing that you really don't have as much time as some founders think, and knowing how much more difficult it is to reignite that market interest than it is to carry it on, gives you an advantage because you know you'll need like compelling utilization of the token as close to day one post listing, and that'll give you better odds of it succeeding and getting that sticky liquidity.
momentum really is the key because
Yeah.
it's hard to create, it's hard to sustain, but if you lose it, it is next to impossible to like create that snowball effect because you created this go to market campaign that drove all of this. And so there's no short way around. Like you either have to limit distribution, so make your airdrop like, you know, spread out over 12 months so you really know how much your loose supply is and you can really account for it. So if you don't have a lot of users, you really limit distribution at first, right? Until you can then
Yeah.
create the core users. And then the more you want to give out freely or less supply, the more you have to make sure that that user base is curated and ideally not only holding, but buying, right? You know,
Accumulating.
yeah. So one of the things we're playing with here is we're building in these different levels for travel discount tiers. And so we're going to give somebody 75% of what they need to access the basic level, but just short enough of the higher tier. With the goal that's like, well, hey, if I give you 3/4 of what you need and you really like it, you may go buy the other 25% to go and access the higher tier, right? And so you can try and turn your airdrop holders and users into actual buyers if you can gate the next tier of what they want as part of it, with either an epoch or something like that. That's the best case scenario. Is obviously
And the additionally making sure that that second tier is highly enticing,
Yeah.
to make it so meaningful that it's something that it'll be a no-brainer for them to commit to, because you're essentially not only asking them to purchase or accumulate more tokens to unlock that tier of reward or treatment as a user, but they have to then park and hold that position, right? So, yeah, a lot of calculations and goes into that, the risk reward for that. The thing is, like regarding travel, it seems to me just such an obvious win for tokenization if you get it right, because who travels more than crypto people?
No,
We're constantly nomadic, going to conferences, meeting with people. So if you become the crypto native travel, for professionals, then you know the demand is there. If they get and then of course you can cast a wider net from there. But that's like, to me, that's the most obvious crypto native user base that has money or is comfortable holding crypto long term, and that are looking for alpha constantly in life, to make their travel commitments more economical.
That's part of why we chose to go with Travel Swap. to be totally honest,
yeah, it makes sense. It fits a need, right? So in our own experience,
and we just need Eric to build it.
yeah, just that little part of the puzzle,
Yeah.
just building the entire thing.
Just do it, Eric. What are you waiting on?
Yeah, help us.
Yeah, no, I guess the long story short, there's no shortcut for finding a true core user of your platform. And if you try and cut around that in any way, you're dead, right? Because there's no holder that'll do it. No token will really survive with it. So like for us, it is kind of natural of like, I just need to find people who travel, understand travel points. They're used to it. Go find your Marriott people, your Hyatt people, your Amex hoarders that love points and arbitrage points, right? Like, and go and do that. I just, that's a matter of KOLs and then verticals of regions, right? Who's your Asia KOL? Who's writing your threads in Chinese so that you're touching those things and doing that, and like these KOLs, some of these exchanges have preferred KOLs. So we're trying to figure out like, if I use your guy, does that make you like trust me more and have more rapport? Where normally if I was, it's petty sometimes that these exchanges, if you have a KOL, they don't like, some of these other minute things. Sorry, Jake.
No. I'm sorry to cut you off, but I mean, on that point, it brings up an interesting avenue is the exchanges, like ways. All right, if you're going to be listing a token on an exchange, how do you make the most of that, right? And like, because exchanges also will offer marketing activations as a part of the listing program, and that's something that can be negotiated. So that's another important thing to keep in mind along that exact front, right? Because it's like they have avenues and channels that their most active traders follow and that they speak to them on.
That's true. They have different marketing activations to get their native users involved. Also, keep in mind that some of the marketing spend, they just want to give free crap to their users, so they stay with them. So keep that in mind. They're not your friend,
quote unquote.
That's the truth.
Trading competitions.
Yes, basically the high frequency traders that are on their exchange, it's free money for them, and at your expense. So if they ever do trading competitions, you're going to want to do the payouts in stables, not in tokens, because if they win tokens, they're going to dump tokens when they're done. They have no loyalty to you. It's just purely economic opportunity. So first you have to say, what kind of user behaviors are we encouraging here by doing this type of marketing campaign with the exchange? Does it end up in selling? If it does, what are the chances that that person would be a user of my platform?
Yeah.
So you get some sort of opportunity to win them as a client or a user rather than just have them as a speculator.
Exactly. Like you're joining like an AMA as opposed to an airdrop.
Yeah, or an airdrop as a response to an AMA, as a qualifying response to an AMA. Doing learn to earn campaigns similar to what Coinbase does, where you have to go and you have to watch some videos of curated content that train and educate people on the value proposition around the token and the platform, and reward you along the way to keep you interested in token rewards. But that person, just based on the 30-second video or 2-minute video that they watch, have an exponentially higher chance of becoming an activated user than somebody in a trading competition. What you're doing for trading competition participants doesn't mean anything to them. They just see liquidity. I want to win it. I want to move on to the next offering. So totally agree. Make sure it aligns with any user acquisition strategy that you have. And think about, does it end in selling and sell pressure on your token? And if it does, what are the odds that this person could be converted into a long-term platform user and token holder? If you don't think it will, pay in stables.